Good morning, everyone. It is 6 a.m., half an hour before we open on Thursday, March 21st. Yesterday, we had the FOMC announcement and the press conference afterwards. Nothing was really unexpected except for Powell making a very strange statement that I went back and I did a whole bunch of searching. I studied my economics once again, refreshed it in my head just to make sure I wasn't the one who was going nuts. But he said something that was absolutely not true, which is if the government, or I'm sorry, if he starts to cut rates ahead of schedule, that would help with the national deficit. It is absolutely ridiculous, and that is a signal and a sign that he's becoming political and that he may be setting himself up for a surprise interest rate cut earlier than what the data suggests that he should do. So what's really interesting is in my search, what I found was that a couple weeks ago, he was actually implying the exact opposite. This article is from Associated Press, published March 7th last year. So a little over a year ago, he was saying that, I think I just said it was a couple weeks ago. It's actually a year ago. He was saying that if Congress reduced the deficit, that could help slow prices, meaning that if we decrease the deficit, that helps inflation go down. We cut rates because inflation is coming down, and so the reducing the deficit isn't going to make the inflation go down. Or sorry, reduce. That's so backwards thinking. If we go and we cut rates, that is stimulatory, that is inflationary. So if inflationary, then that would imply that would force according to his previous statement, that would imply that in an inflationary environment, the deficit increases, which makes sense because prices are increasing and we have to spend more to accomplish the same thing. So for him to now, right yesterday, say that, hey, if we cut rates early, if we cut rates and stimulate and create a more inflationary environment, then suddenly the deficit is going to shrink. That's absolutely ridiculous. So Mr. Powell is becoming very political, and we've got to watch out for that because there could be some off-schedule rate cuts, or we may get rate cuts sooner than anticipated. So the news after the FOMC, I'm sorry, the market reaction after the FOMC announcement and after Powell speaking was very positive. We got very bullish. Did get directional. So let's see how that's translating into this morning. And we still have carryover. So we're still very enthusiastic this morning. I take it that Asia and Europe took the news very well, and their markets are probably up, and that is bleeding over this morning into our markets as we open. We've got NASDAQ up almost 1%. We've got the Dow less than a third, so Dow is still in the random region. And then the S&P 500 about half a percentage point, 50 basis points. So NASDAQ and S&P are up a non-random amount. However, we shouldn't really expect this to be a very bullish day. Yes, we are going to gap up, and we are likely, given how much we're gapping up, we're likely to close above where we closed yesterday. We are unlikely to undo the entire move that happened yesterday, or even the gap that's happening this morning. But we shouldn't really expect our markets to go straight up from here. There's a number of reasons why. I mentioned a few of them yesterday. The first one being that on FOMC, the initial movement tends to get reversed and undone the following couple of sessions. And the second being that we made an all-time high, and normally when we make an all-time high, we need to pause or pull back. And today it looks more like a pause, given that we are gapping up. So we might just get a baby movement upwards by the end of the day. Although right now at the open, it looks pretty significant. So that implies that a downward movement today, and that would be supported by 70% of the time we move towards the direction of the previous close. So today, if we open and we start moving towards the direction of the previous close, that would be closing the gap. That would be heading towards yesterday's close. That means a downward movement, and net overall, more maybe a downward movement throughout the day. What we want to see is after 7:30, 8 o'clock over here, we want to see if there's a reversal, or if we get weakness. If we open with weakness and we start coming down, by the time we hit about 8 a.m. Pacific time, does it start bouncing and start moving back up? Or if we float sideways, do we start getting directional? If we move upwards, do we start moving down? And then where do we start? What direction do we move for the rest of the day? So it's going to be important to watch, because if we start challenging this 520 level, which would be undoing the entire gap, which is, given how large the gap is, that's going to be kind of unlikely. We're really unlikely on the NASDAQ, pretty unlikely on the S&P. So we're not going to get too excited. What will happen here is, if we pull back, is that we'll at least get a little bit of separation in our stocks, at least on the day basis. So if we're day trading, that'll help, because some of the stocks will exhibit weakness and some of the stocks will be resilient and they'll be steady. And those will be the stronger stocks. And if we come down on the index and there are some stocks that are still flat, that is a great day trade to the upside, because if the market bounces, then those stronger stocks will move first, bounce harder, more likely to move upwards than a stock that helped drag the S&P down to those levels. So that's the intraday basis. We want to take a look at a daily basis. We mostly swing trade. So let's take a look at how this is looking right here. So the S&P 500, all-time high yesterday, opening higher today, which automatically means that we have a new all-time high. That is pretty unusual after making an all-time high. So it's already stronger than all the cases that I pointed out yesterday, although here's an example right here. All-time high, there's nothing before this that was above it. And we did open, well, we opened not higher, we opened about the same as the previous day close. We did make an all-time high again 2 days in a row, but then we traded about the same level as the previous day. So even though we make an all-time high, a subsequent all-time high, it ended up just being a chop sideways. And that's really what I'm expecting today. I'm not expecting a clear road to this red line over here, the 30% gain from the low. It should have some challenge on the way. If not, then it starts looking parabolic. Or it'd be a green day, a bigger bar, green day, all on sub average volume. And then today, if we get a green day and a large price bar, and we close at the top and we get a large green volume bar, then that starts to look like capitulation, which we don't have right here. We had capitulation on the QQQ, except we had capitulation on the SMH right here, except the bars were red instead of green. So Are we going to go and keep on moving higher? Probably not. There's a few more signs of that, one being momentum. Let's take a look. We looked at this yesterday. We looked at momentum yesterday, but we're going to look at it slightly different today. So we looked at this and said, this is completely green, and there's no way for us to discern, because if everyone makes 100% on the test, then you don't know who the better student is, right? So that's another reason. This is telling me that some sectors, some areas have to pull back and give us separation, because this is not sustainable. So I know that at least some sectors are going to pull back, and probably pretty soon, probably today. And if we then look at our 90-day highs and 90-day lows, you can see that we're at extreme levels again. We're above this 400 level, and we have 90-day lows. We only have 14. So every time we hit the 300 or 400 level, these days it's been closer to 400 level, we pull back on the short term on 1 or 2 day basis. So we really aren't going to expect today to be super green. And if it is super green, then we're not going to expect the following day to be super green. And if it is, then we're going parabolic, and then we're going to expect that pullback at the least back to the EMA 8 at that point, because that would be pretty far. We would separate pretty far from the EMA right here. And yesterday we were talking about how the QQQ, how we are starting to get separation between that EMA 8 and EMA 20. And when we looked at the SMH, we said this bar, its high was a pretty far deviation from the EMA 8, and that'd be the largest deviation we've seen in this entire uptrend. And that was a signal that we would pull back and perhaps end the trend. At the very least right now, we've gotten that pullback to the EMA 20. And we would expect the same thing out of the SPY or QQQ if we start going a little parabolic right here. So again, I'm not expecting today to be overall a day where we continue to close at extreme highs. We might, from the opening, we already know that it's going to make an all-time high. I just don't think it's going to stay there or go above it by the end of the day and close up there. Okay, so today is a really good day for, if you had any bullish positions, to take those profits early on in the morning and then see what happens at 8 o'clock or so. If you have systems or if you have trades lined up to go to the upside, you could wait until 8 o'clock before 8 o'clock Pacific before executing on them, because we may get a little bit of pullback. And so if you go in right at the open, then you could see some losses before you regain and continue to move upwards. But that's, if it doesn't fit within your strategy or your timing, then don't bother, because we could go straight up from here. So I'm just talking in probabilities. So what we really need is a little bit of a pullback at the very least, maybe back down to the EMA 8, so that we can see separation over here. And not every single stock is trying to make all-time highs or 90-day highs. We have 464, I think it was, out of about 500 stocks, they're making 90-day highs. So that's almost the same scenario as what we see right here. And it's just going to be impossible to know which ones are weak and which ones are strong. And you might say, hey, Kane, why can't they all be strong and continue to move upwards? And the reason is because my IWM, my small caps, are still in this pink range. They're still chopping sideways. So it's not a bull market. We are in an uptrend, but we are not in a bull market. In a bull market, a rising tide raises all boats. Every single stock can go up. It's just some go up faster than others. But we're not in that environment. We don't have small caps leading mid caps, leading large caps. We don't have tech leading, industrials leading staples. We don't have that. We don't have consumer staple, consumer discretionary at the very least, and retail leading the industrials and leading the staples. So we're not in an environment where the tide raises all boats. So I'm not going to just say pick any stock and it'll go up. We're simply in an uptrend. So we do need to pick stocks. We need to pick the ones that are stronger. And until we get separation, until we get a pullback, we're not going to be able to see which ones are stronger or which ones are weaker. So for now, if I did want to go long stocks, I would still be sticking to the slightly safer ones, not the high flying, not the QQQ ones, not the SMH, because we are seeing possibility of this being the peak right here. I would be going for lower beta stocks. That way, we can still gain on the way up. We just won't gain as quickly as the S&P 500, which is fine. We're still making money. But if the S&P 500 starts coming down, or if we start breaking trend, then we're not hurt as much on the way down. So as a portfolio manager, as a manager of money, asset manager, portfolio manager, money manager, whatever you want to call it, the job is the same. And the first job is to protect and to preserve your capital. That way you can always take advantage of subsequent opportunities that come up. So we always take a risk first viewpoint and then a gain type of viewpoint later after considering the risk, and not the other way around, and not completely ignoring risk. So right now, if we got over enthusiastic and just started buying all the SMH stocks again, and Nvidia and Bitcoin and all the high flying stocks, that would be putting our growth and our capital or gains ahead of our risk, or maybe even not even considering our risk. And we don't want to do that. Now is not the time to do that. Maybe if we are in a full market rather than just an uptrend, that would be okay. But right now we're in an uptrend. We just bounced off of the EMA 20 a few days ago. We just made an all-time high. We're coming off of enthusiasm off the FOMC. The more likely direction in a 1 to 5 trading, so basically in the next week, and today until next Thursday, the more likely direction is a pullback, a small pullback, not a big pullback, but pullback at the very least to the EMA 8, if not back to the EMA 20. And then it would be time, if we saw a bounce like we did over here, then it would be time to say, hey, maybe we could start going a little bit more aggressive. Right now, right when we've hit an all-time high, that's not the time to get super aggressive. So I think we've looked at everything that there is to look at for now. The FOMC and spillover from the FOMC announcement is still dominating this market, and that might change tomorrow, although it'd be the end of the week tomorrow. So certainly by Monday, that'll change. But we're definitely seeing spillover today. We may see a little bit of that tomorrow. And I'm pretty sure we don't have anything else happening this week. I guess Powell is speaking again. It'll be interesting to see if he reiterates hey, if I cut rates sooner, then that decreases the deficit somehow. That'll be interesting if he says that again, or if he says something else that is strange and not supported by research or history. And I don't see anything today. I don't see anything today that'll be too significant. So we could look out and see what Powell says on Friday, but otherwise today is just spillover from the FOMC. And Friday, if we get that down day today, then not down day, if we get the overall downward direction today, then the FOMC, the effect of the FOMC announcement could be over on Friday. If we get continued enthusiasm today, then we're still getting spillover from the FOMC meeting. Watch out, especially the first hour and a half of trading. I wouldn't make any huge investment decisions until I saw the direction that the market is going to take at the open. So I think that's it. Yeah, that'll be it today. This afternoon, unfortunately, I won't be able to make it live to the aftermarket session. So I will see you guys tomorrow morning. Have a wonderful day, and we'll see you tomorrow.